You can now deduct your car loan interest. Yes, under the One Big Beautiful Bill signed by President Trump on July 4th, starting 2025, you can deduct up to $10,000 per year in interest on personal vehicle loans. I'm Leonardo Resende, CPA and founder of Leader CPA, and here's what you need to know. This deduction applies to new loans taken out after December 31st, 2024 for cars, trucks, or motorcycles used for personal purposes, as long as the vehicle was assembled in the US and the loan has a first lien. The vehicle must be for your personal use, and the VIN number must be reported on your tax return. Let's say you financed a $40,000 car in 2025 and paid $3,500 in interest. You can now deduct that interest, directly reducing your taxable income. The full deduction is available if your annual income is below $100,000 if you're single, or $200,000 if you file jointly. For every $1,000 above the limit, the deduction drops by $200. And yes, even if you file married filing separately, each spouse can still qualify for up to $10,000. This is a rare chance to write off personal car loan interest. Want to be sure you qualify? Contact us to schedule a consultation and follow us for more practical tax tips.